We're on the floor at PDAC 2025, and we're here today with Anthony Milewski from the Oregon Group. How are you?
I'm great. Thanks for having me, Tracy. I always enjoy catching up.
Well, I'm looking forward to your commentary on the market overall, but first I just want to congratulate you on that excellent post piece you did on Indaba. Would you mind touching on some of those points? Because I've had a lot of feedback with InvestorNews readers about that.
Yeah, I think it's really a commentary on where we're at in the market. And, you know, we've had this bull market in crypto, tech in the US, the S&P, they've all performed really well, but our sector really hasn't. And, you know, there's a lot of thought about why that's the case, but it was really going into the liquidity and where markets are at. And, you know, I think we're at a bottom now. And, you know, this conference is sort of verifying that. Like, look how busy it is today. As we go around, there's, you know, a 30 or 40 minute wait just to get a badge.
Well, I'm saying this is the best PDAC in the last 20 years that I've attended for just energy and the amount of attendees. I don't know what the actual numbers are, but let's start there. What are you going to be looking for on the floor? Like, I just spoke to one investor. He says he's got 30 one-on-one meetings with companies in copper and gold in the US. Is there something you're looking for?
You know, I'm a thematic investor, and so I like to chase those themes, and I think gold is a theme. You know, it's sitting at 2,800, 2,900. Yeah, notwithstanding the fact that we had all this cost inflation in the mining companies, you are now seeing the big gold names that moved 50%, 100% over the last 18 months. Huge free cash flow in their earnings. And I really think that for the first time in more than a decade, that's going to trickle down into the microcap stocks. So these stocks that have been no bid now for, you know, years could all of a sudden wake up and have, you know, the spectacular returns that we've seen. So I think in the first instance, and I'm not a gold bug, as you know, in the first instance, just these microcap gold names are super interesting, I think.
Would you say that Trump is the defibrillator for this gold industry, or would you credit him for being, getting the market moving?
I think it's complicated. So we're living in like most of our lives we've lived in the halo of World War II. And so everything, all the markets were a result of that reconstruction of Europe, the USD as the global reserve currency. And now as that generation has largely passed, we've exited that moment, and I think we're in a new world where you have China on the rise, you have Russia acting up. And so Trump coming in is really a symptom of that change. And so while he's taking actions like around critical minerals or US-based assets, I wouldn't say it's all on him, but certainly if you look at what's transpiring in the market, we've entered this kind of moment now where we are no longer in that bubble in this unipolar world, and everyone is vying for what we're going to look like over the coming decades.
And of course, in addition to gold, you know a great deal about critical minerals. And people are talking to me about germanium, tungsten, they're talking to me about antimony. What critical minerals are you prioritizing?
You know, I think they're all interesting. And the reason is, you know, when you think about mining, most people just think, okay, we're going to mine this thing and here it is. But actually there's two components. There's mining that rock, which, you know, we're over 17 years now from discovery to building a mine, 17.9 years. So that's just part of it. The second part of it is refining. And so if you take antimony and tungsten and gallium and germanium, you know, some of those, in fact, most of those have between 90 and 96% of global refining installed capacity in China. So it's one thing to say we're going to mine it, but then on top of mining it, you have to actually go and refine it. And so because of that, if you look at antimony as a case study, you know, China comes out and basically says, USA, we're not going to give you more antimony. So the price goes from, you know, roughly 11,000 to 53, 54,000 now. And that's just one example. But if you take antimony as an example, and this would be true, by the way, of tungsten and gallium and germanium, and you look at its uses, in the case of antimony, you have hardener for bullets and fire retardant. In the case of some of these other metals, they're absolutely critical for chips. You know, you're a little bit held hostage to China and their refining capacity. And so that means US-based assets, I think, and Canadian assets are going to become highly valuable because, one, they're going to want to secure the supply, and then two, they're going to have to create installed refining capacity.
Well, that is an excellent answer, but Anthony, I'm not going to let you off the hook that easy. Germanium or gallium?
Both.
Okay.
You know why this is interesting. So when you think about some of these, the entire global production might be like this much, right? Like it's and by the way, it's a byproduct of something else. These aren't primary metals, so they're a byproduct of gold or whatever's being mined, and so it's actually very challenging, to think about. And in fact, I was talking with this investor, and he's starting a company called Critical Metals Vault, and they're actually buying, or they're helping retail buy these metals and then store them. Because let's say you want to express a view on germanium, you almost can't. I mean, you can go buy a gold or copper mine or someone with a credit. So it's a real challenge, and I've thought about this a lot because one of the things over the years that I've done is create access products, creating the ability for investors to invest in these esoteric minerals. And maybe we should do this, Tracy. I mean, it's something to think about because people are going to want to express views, and it's very hard to do. So I actually like all of them where you have the bottleneck being Chinese refined capacity, and that really is that whole range.
So here at PDAC, what is your goal?
I just like catching up with management teams and investors, people like yourself who are influential in the industry, and just getting a sense for what it's going to look like over the next 12 months. And PDAC is one of the first major conferences of the year, as you know, and it's kind of sets the tone, or helps sets the tone for what we're going to look like for the next year.
Well, we're looking forward to your post-PDAC analysis. We all are. However, I still have one more question for you. It's actually twofold. Uranium or thorium, and tell us why, please.
Yeah, so obviously you've probably seen that Chinese news about the thorium deposit that they've discovered. I think that when you're talking about this kind of technology, the adoption isn't measured in days or years, it's measured in decades. And we have global adoption of nuclear energy in a certain form. You have the Al Gores, the environmentalists of the world on board now, right? You have the left on board, the right on board. And so, it's a little bit like when we go back in time to battery technology conversations, the lithium ion battery, well, guess what? A decade later, it's still the battery of choice. I think thorium over time could gain market share, especially if China pushes it. But for the investment horizon that matters to me, you, and the listeners, I think that uranium and nuclear energy as it looks today is going to look the same way in 10 years. So that's my call.
You always give such good investment advice. Would you like to leave our audience with a tip?
I think if you want to talk about right now in the next year, if gold stays where it's at, I think you need to really go look at gold. And if you don't have a name, because I even look at myself, I don't have a gold junior that I like because I haven't looked at the space in a decade. So I went and bought GDXJ, the index, right? And I think, that's a starting point, but I think if I had to go and invest X number of dollars, I'd probably put it there. Although I think US-based assets, copper, critical minerals, going to be interesting. I think uranium remains critical to the energy conundrum around data centers. So there's a lot of exciting things going on for the first time in a long time.
And of course, we were touching on uranium and the utility. If the utilities open their gates, their floodgates for actually buying North American uranium, that is going to have a major uptick with the uranium stocks in North America. Thank you so much for joining us today. If you want more information on the Oregon Group, please go to the following website. And Anthony, thank you for joining us today.
Thanks a lot, Tracy. Really appreciate it.